Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everybody, checking in on the market. It's looking like some short-term consolidation may be due in the market. The reason being, we hit a new all-time high in SPY today, but only by 10 cents. And it was the smallest range day that you're going to find in a long time in SPY. The total range of the day was 77 cents. And you look at the size of the daily candlestick, you're not going to find many smaller days. Even on holiday half days, we have more range than that. So what that means is, it will be fairly easy for the bears to break the low of today tomorrow to then be looking for a daily higher low to form compared to 312.81. So the bulls have about $7 of space to be working with to look for that higher low, and will be patiently waiting for it to form if we break 319.48 tomorrow. IWM had a bit of a 4-hour equilibrium setting up where we had our high, low, lower high, higher low. Still within this pattern right now, the bulls would have to break 164.85 for a bull break, and the bears have to break 163.61 for a bear break. This is a pattern to be watching for into tomorrow. This is now day number 3 of this tightening range, and a break will be imminent, probably tomorrow. QQQ, same thing as SPY with a very small range, a new all-time high, but just barely. And if we break 209.04 tomorrow first thing, we then look for the daily higher low compared to 205.96. XLF, double top at the all-time high. And if we look at extended hours, it's a triple top. 31.05, 31.02, 31.04. So that only matters if the bears start to take over. So if we see, for me it would be meaningful if we get a bear break of 30.79. Right now it's an ascending triangle with a horizontal line of resistance and higher lows. So trend line drawers would put their uptrend and they'd be watching something like that. But for me, it's the price levels that matter. And if we can see the bulls hold 30.79, they stay in this pattern, break 30.79, and it's a bear break. So we have a 4-hour equilibrium on IWM. We have an hourly ascending triangle on XLF, so some nice tightening patterns to be watching for tomorrow. XLV, inside bar, inability to break the high of yesterday. And if we see a bear break of 101.72, we look for a daily higher low to form compared to 99.30. And the high of the day was just under the high of yesterday. Biotech sector. So for me, the biotech 4-hour time frame has the most clarity. It was a nice equilibrium with a double bottom. We got a bull break. And at this point, I would need to see a clear loss of the exponential moving averages on the 4-hour time frame and a bear cross of those exponential moving averages to see the first shift from the bulls, who have had a very firm grip for a 30+% move over the last 2 months. And I need to see a loss of the uptrend and a bear cross of these exponential moving averages to see the bulls lose their momentum. The VIX, daily inside bar today. If we see a break at 12.50, we look for a daily lower high to form compared to 16.90. So again, it is looking like some short-term daily consolidation is underway. And if it's going to be anything more than daily higher lows that we're looking at to form, we will need to see notable bear volume behind any pullback. Gold, watching that 12-hour equilibrium or 12-hour lower high. It took a while, but it does look like it's just now being set. Need to see a bit more follow through below 1474. If we keep pulling back into tonight, we then scout the 12-hour higher low around 1470 or so. That's when I'll be interested in bull miners and gold bulls, but I'm not comfortable with bullish entries here without that higher low forming first. Silver, we're watching for the potential of a tightening daily range where we have the high, low. This may be our lower high, higher low every individual day, 6 days in a row. So if 1694 breaks tomorrow, that will be our lower high being set and we will then need the higher low compared to 1651. So tightening on the 12-hour for gold, potentially tightening on the daily for silver, and bull miners still not finding a daily higher low and closing at the low of the day. GDX needs to hold 2685. That is a key level tomorrow, and the hourly RSI will potentially be oversold as that is being tested. It is a potential bottom fishing play. But again, I need to see that gold consolidation if I'm going to be confident looking bullish for the miners. Oil all bull today. Pretty sizable pullback since I last looked. But we got a bull break of 60.45. Anything above 60.02 is a 4-hour higher low. Looks like we had an end of the day little sell-off. Looked like an hourly bull flag. Much more significant pullback at the end of the day. But again, 4-hour uptrend is intact. And we got the inventory report tomorrow. If it's a bearish reaction to the inventory report, anything above 58.09 is a daily higher low. If it's a bullish reaction, 61.04 and then 62 with the next resistance, a lack of previous price levels in this current range. Natural gas, keeping up for the bulls. We almost lost the 4-hour uptrend, but we didn't. So we have not topped out with a daily lower high yet. We know anything under 246 is a daily lower high, but until we lose the 4-hour uptrend, that daily lower high is not set. There we go. That just wasn't an updated chart. So inside bar today, 4-hour uptrend still intact, but just barely. We broke support by 1/10 of a penny. That's not enough. We would have to fail to break 235.4 and then roll over to be in a 4-hour downtrend for us to then say daily lower high is established, and the only chance for the bulls to change the trend from there is the inverse head and shoulders. So something to be watching for. Other than that, I made a couple trades today, day trades. Been having a good December and a couple good days scalping. Today was Roku. Just a nice, I love when you see this kind of volatility in the first 30 minutes of trading, because that tells us look for an equilibrium. So when you see the high of the day and you dump $5 to see the low of the day, and as soon as you start to see this bounce, I said, all right, we're extended. I'm going to top fish the high of the day and make a bearish entry. So I made a bearish entry. I covered half of my position after the start of the pullback to mean worst case scenario, I break even on the trade, because that allowed me, by covering half, to put my stop above the high of the day to be break even. And then I covered the second half. My target for the trade was the mid 135s. Covered the second half. That was that trade. Bing, bang, boom. Anticipated the 5-minute equilibrium. Didn't trade it after that though. There was one more bounce to be had. That would have been a decent little entry there, but took that top fish. That was that. Took one little bear trade in Tesla, and that was on a break of these 5-minute supports. We had a 5-minute high of the day, low of the day, lower high, lower low, and then it just got real tight. And so as soon as we took out these little supports, I entered on a break of 379.60, and as soon as that level broke, I was in and quickly covered for a small gain, because I saw this as initially a failed bear flag, and more importantly, I wanted to get off the computer. I take a lunch break from 12 to 1, and I did not want to sit here and babysit that trade. I did not have a comfortable enough position to just set a stop loss and leave it, because we didn't have any nearby clear 5-minute resistances to play off of. So I did exit too early before that extra leg down, but what held me off from sticking with that short was knowing that we would likely have to bounce to form an hourly lower high and lower low if any meaningful daily consolidation was going to take place. So Tesla bears will be on top watch tomorrow. If we fail to break 385.50 and then drop down and break 375.90, we will then be in an hourly downtrend, which means zoom out, because a daily higher low then has to form with more meaningful consolidation. Had a couple other smaller trades aside from that. Talked about one of them in the MJ video. At one point today, I was, between yesterday and today, 9 for 9 on short-term scalps. And that was just highlighting the importance of base hits. None of them, the biggest trade out of those 9 was a 75% daymaker. And there was a lot of half day makers, 25% day makers. But in the end, going 9 for 9 on small scalp trades and small day trades resulted in 4.5 day maker. So just an example, not needing home runs to be able to stack up those wins if you are consistent, and just keep that risk small. Again, selling half a position to be in the clear, where worst case scenario is you break even. That is my favorite trade of 2019. Hope you had a good day. We'll check back in tomorrow. See you then. It's 3 a.m. I got work in the morning, and you Blue Jays in my front yard. Bunch of punks, supposed to be tough. What, square up? You want to go? Get out of my front yard. Hey, you, what you doing? Someone, throw down, let's go. Hey, kid, you think you're tough? It's my corn. It's my yard. Get out of here, punks. Go to bed. It's my corn. My yard. I'm a brown thrasher.